Hello, everybody. Dave Asplin from MPI, and I have with me Charan Singh, MPI's Director of Retirement Services. And this presentation is put together for you to understand the new IAP hardship benefit. So Charan is our expert in this area, and I'm going to have him get right into it. And we're going to try to make this brief and understandable for you. So here we go. Good morning, Charan.
Good morning, Dave.
So tell the good people of MPI about this benefit that is available to them starting May 1st.
Yeah, absolutely, Dave. So if we can just quickly, before we jump in, just a quick disclaimer that the information that's presented here is very high level. In case you mishear something or misconstrue something, what's in the trust and the SPD will govern. Those are the actual plan rules, and we're just trying to give you a brief summary of it. First thing, Dave, as you know, one of the big questions we get at the plants is, what is the IAP? What is the individual account plan? How is it different from my pension plan? I didn't even know I had a separate plan from the pension plan. I thought it was the same thing. So I thought maybe we can just start off by quickly summarizing for our participants, what are the key differences between the IAP, the individual account plan, and the pension plan. So first off, the contributions in the IAP go in from employers based on the dollar amount of wages earned. In the pension plan, it's based on the number of hours worked. The vesting in the IAP is one qualified year, which is 400 or more hours in a year. And for pension plan, it is 5 qualified years. The benefit payment, typically for the individual account plan, is paid as a lump sum when you retire. And you do have a monthly annuity option, but most people end up taking the lump sum. On the pension plan only allows monthly annuities. The benefit amount for the IAP is employer contributions that are made, plus any investment gains or losses that accrue on the account. And for the pension plan, it's just hours worked times the hourly benefit rate that's in the trust. And important question, is the hardship withdrawal allowed from any of these plans? So very important to note that the hardship withdrawal is only allowed from the IAP, not from the pension, and it's only for the reason of the COVID-19 global pandemic, no other reason. So this is a one-time special benefit in that regard. And another important question to note is, if I take this benefit, will it reduce my retirement benefit when I retire? And the answer is, for the pension plan, absolutely no impact. This is not coming out of the pension plan. Your pension plan is separate and it's secure in the way it's calculated. It's a different stream. But yes, your IAP will be impacted. It will absolutely reduce the benefit payable to you when you retire, but only from the IAP.
Yeah, I'm glad you went over that, Charan, because we have started to get that question already. How is this going to affect my pension check when I retire? That's that monthly pension benefit. This money doesn't come from there at all, but participants need to be very aware that this money does come out of their IAP account, and it will lower the amount of their IAP at the time of retirement if they don't repay it. So, and I know you're going to get into some of those details as we go along. So let's keep moving.
All right.
And you'll provide everybody some idea of kind of the basics around this benefit.
Yeah. So, just to introduce, what is this COVID-19 IAP hardship withdrawal? Basically, it's a one-time hardship withdrawal from the IAP, only from the IAP, and it's due to adverse financial consequences from the coronavirus pandemic. You can withdraw. So the next question is, how much can be withdrawn? Any amount of $200 or more, up to 20% of your 2018 account balance, or $20,000 maximum, whichever is less between those two amounts. Another important question that we are starting to receive, is this a loan? Do I have to pay it back? So the clear answer on that is, it is not a loan, but you do have the payback option at no interest within 3 years. Is a rollover allowed? So no, it's not a rollover. You can't take it and put the money into an IRA account, for example. It's a cash distribution only, made payable to you, the participant. Who is eligible? So anyone who is vested in the IAP, so 1 or more qualified years. You don't have to be vested in the pension plan. As long as you're vested in the IAP, you're good to go. You can apply. When can you apply? So this is very important. The application window is authorized by the board It's only 3 months. So starts on May 1st, 2020, and ends on July 31st, 2020. Is it taxable? So tax withholding is optional. You are able to spread taxes on this over 3 years. So that's an election that you will make when you tell us how much your distribution amount should be. And you can choose to withhold 0 or 10 or 20%, and we'll get into that in a few minutes. And is there a penalty for early withdrawal? So there's no 10% early withdrawal penalty from the IRS. It's been waived by the newly passed CARES Act of 2020.
That's a really good summary. Thanks, Sharon. So it's not a loan. I don't have to pay it back. Yet if I don't pay it back, I will owe taxes on the amount that I took out. Even though I could pay them over a 3-year period of time, I will owe taxes on that.
That's correct.
Okay. Can you just touch on real quickly for everybody, what exactly does one time mean?
So one time means that you literally have one application during this 3-month period. So my plea to participants is to basically make sure that you're requesting the correct amount on the first try. Because if you think that you start with a smaller amount and that amount you determine in 2 months is not going to be sufficient, so please take that into account. Make sure that you're requesting the correct amount because there's only one application. If you submit a second application, it will be denied.
Right. So great advice. If you apply early in the application period, early in May, let's say, and you discover late in July that it wasn't quite enough money, you wish you would have taken more, you're not going to have that second chance.
That's correct.
That's what one time means.
Yeah.
All right, moving along. This really gets to the heart of why this special hardship is allowed. And could you go over kind of the 2 qualifications or criteria for receiving the benefit?
Yeah, absolutely. So Dave, one of the key requirements of this hardship provision, and this is required by law, is that the participant who's requesting this withdrawal has to certify that they meet one of these 2 criteria. So the first criteria is either I, my spouse, or my dependent is diagnosed with the virus or the disease that the virus causes, or they are experiencing adverse financial consequences as a result of being furloughed, laid off, having work hours reduced, etc. So this is a required certification, and we just require a self-certification, self-attestation that you meet one of these requirements. And my guess is most of our participants are going to be in the second category, who are experiencing really adverse financial consequences as a result of production being stopped on the sets.
Right. Well, let's hope so. Let's hope that most people are falling into the second category, because the first category is not great. Neither is the second category, but I noticed something with number 2 here, and maybe you could just say a quick word on it. In number 1, it says, I, my spouse, or my dependent. But on number 2, it just says, I am experiencing adverse financial consequences. Can you clarify there on number 2 how this applies to an individual? And does it apply to the family? How does that work?
So you're right. So the first point there about the diagnoses, that can apply to you, your spouse, or your dependent. So in that case, the definition is broader. And so if you or your family member, direct family member, are affected by the disease or the virus, obviously you meet the criteria for number 1. For number 2, it's very clear in the law and in the regulations and in the trust now on the MPI side that you, the participant, have to be experiencing the adverse financial consequences. We've had a question come up like, hey, I'm still working as a participant, but my spouse is laid off or furloughed. Can I take advantage of this hardship withdrawal in that case? And if you're trying to self-certify under the second option, the answer, unfortunately, is no.
Great. Important clarification. Thanks for that. Let's get into exactly how someone goes about applying and receiving this money.
Yeah, absolutely, Dave. So, we took this very seriously because, there are thousands of participants who are in this situation. So we wanted to make sure the application process that we open up is, uniformly available and we don't get too much paper in the office because we don't have a lot of folks working in the office. So we wanted to build an application process that was efficient, so we don't delay getting the checks out to the participants. So this is a 100% online process. And here's the way it works. So the first step is you get online, make sure you're registered, you're able to log in, and then you choose the COVID-19 hardship withdrawal form from our forms menu. The second step is you'll confirm your address. And this is a really important step because this is where your check is going. So you better make sure, your address is correct. We allow online changes. It only takes a few minutes if you need to change the address and kind of go back into filling out the form. Very easy. And then we have a hardship application portal. This is where you learn about the benefit. You learn if you're not familiar with using, your phone, your mobile phone, or your desktop to submit an application. You can learn that here. Watch some tutorials, and then here you'll also be given the opportunity to download the form, which is called the spousal consent form. So you'll download the form and you'll scan that back in or take a picture. And then step 4 is you start our application process online. Really easy interface. You make your amount elections, your tax elections, and then you upload the required documents, agree to the terms, and submit the form. And then if everything looks good, step 5, you receive a check. So the check is mailed within 30 days if all documents are received in good order.
Sounds fairly straightforward. Going to our website, it will take you through it step by step, and you can get to our website with a computer or with a smartphone, correct? It'll work either way?
That's right. Yeah, we've really worked hard to make sure our technology is available through a mobile web browser. This is not through our mobile app, this application process. It's available through, if you have an iPhone or an Android, like a Samsung, you can get on the browser of that phone and get to our website and follow the instructions.
All right. And so once this is all done, just a reminder here, a physical check is going to be mailed to the participants. So having that address, that home address, is extremely important. Or if for some reason you're not living at home right now because of the unusual situation we find ourselves in, we must have the correct address of where you're at if you want to receive that physical check. That's the way to do it.
That's absolutely correct.
Okay. I saw the step that you had previously to learn and prepare for this. What exactly am I preparing? What do I need beyond, my smartphone? What documents do I need?
First thing is, if you're single, we need to verify your identity. We need a electronic copy, scan, or photo of your personal ID, which is, a government issued document. For most people, it's going to be the driver's license. But if for some reason that's expired or you don't have one, we can take a passport, a green card, or a naturalization certificate. So any government issued photo ID that's not expired. And if the participant is married and the amount of the account balance is over $5,000, then we need a copy of their personal ID, and we also need a copy of their spouse's personal ID. Very important here, we need the spouse's ID to have their signature on it. So like a driver's license typically meets all those requirements as long as it's not expired. And we need a signed spouse's consent. And that spouse's consent is provided online right here on the application portal. You can download it, print it, sign it, and take a picture of it, and you're ready with these documents.
Sharon, that is not a new requirement, right? The spousal consent. That is part of our trust agreement. I believe it's a legal requirement as well for all plans similar to this. And it's something you would do when you get your IAP distribution at the time of retirement. Is that correct? That all sounds familiar to me, right?
Yeah, that's absolutely correct, Dave. So, spouse's benefit or spouse's claim on a participant's benefit is protected under law. So anytime a participant is making an election and the account balance is over $5,000, the spouse has to consent to that distribution.
Okay, great. Thank you. There's this question about taxes, and we are trying to make this as easy as possible, but taxes are never really easy. So give this a once over.
Right. Okay. Tax issues are complex. And I'll just say everybody's tax situation is different, right? So we don't know For example, how much money you'll make this year, how much money your spouse will make this year if you're married. We don't know if you have other income like a rental property or if you have any other sources of income. We don't know your dependents. We don't know, we don't know a lot about your tax situation. So you're in the best place to decide what your tax situation is and how much tax withholding you should take. So the way this process works is we've tried to simplify it for you. The first step is you calculate how much amount you need from this hardship withdrawal. Do you need $4,000, $5,000, $10,000, $20,000? You first make that decision. Then you decide on your tax withholding election. We give you the option of picking 0, 10, or 20% withholding. And if you're a California resident, we give you some options on the California withholding as well. Remember, you can choose 0 withholding. There's no penalty for not withholding anything. Then the third step is MPI, through our systems, we will take out, in addition to the amount that we're going to pay you, we're going to take out an additional amount for taxes. We're going to add on top of what we pay to you by check. We're going to deduct that also from your IEP account. The fourth step here is we'll mail you the check. And then the fifth step is we will send the taxes on your behalf to the government, to the IRS, and to the state of California if you choose to withhold any taxes.
So the way we make this simple for applicants is we just ask them, what do you want your check amount to be? And we figure it out from there.
That's right.
That's kind of the bottom line.
Right.
Okay.
And so we've built an online calculator that helps our participant do just that.
Okay. And even though this might sound a little complex, I think that we've designed the application itself in a really good way that once you get into this and start plugging in the numbers, it's pretty self-explanatory.
So we fully disclose, everything that you're going to sign off on. We build up from the amount of your check, include your taxes, display it to you, and then only if you agree with what's presented online that you can continue onto the request.
Okay, well, here's an example. Sharon, why don't you just give a brief explanation of what this is?
Yeah, absolutely, Dave. So this slide and the next slide, we have 2 examples, one for $10,000 check amount, the other one on the next slide is $20,000. Instructions are pretty much the same. So if you look at the bottom line, I just want to point out like the last line right at the bottom of the screen where it says amount of hardship check. So very important to know that this is what you're telling us as your starting point. You want to check for $10,000. Everything above that is something that the calculator on the website is doing for you. So for example, I'll just show you one to compare against the 0 tax option. So if you look at the second column where it says 20% federal, 2% California in the column heading. If you look at that, your IEP distribution is going to be $12,820.51. But look at the hardship amount at the bottom. It's going to be $10,000 because you wanted a hardship of $10,000. This is how the gross up works. We're grossing up the amount of the hardship to account for taxes, and then the total amount that we're deducting from your IEP is going to be $12,820.51.
Right. So the line that says distribution, that really is the deduction. That's the amount that's pulled out of the account. And then those tax withholdings, both federal and state, we're sending those in to the IRS and to the state franchise tax board. Those payments are made on behalf of the participant.
Correct. And just know that, this is not the amount you might actually owe, right? So
right.
They're just withholdings. Yeah. You determine your tax liability, how much you owe at the end of the year when you go and file your tax return. So right. I would say these are just indicative amounts. They're just submitted on your behalf. You may get a tax refund or you may owe more just depending on your tax situation.
Here's the next slide with 20,000. I think we could probably skip past that one, don't you think?
Yeah, absolutely. Same concept, just a different amount. And feel free to hit pause and look at the detail.
All right, I think we've covered it all. It may have sounded a little complex, but again, it really isn't. Once you get into the application, the process is very well designed. But if somebody needs help, what do? Email
is the easiest, fastest way to get our participants the help they need. but they can also call our call center at 855-275-4674, and the email account is service@mpiphp.org.
Right. All right. Thank you very much. And thank you, Sharon, for walking us through this and for setting up this benefit so thoughtfully. And we wish all of our participants well. We all hope to get past this episode in our history as quickly as possible, but also as safely as possible. So best wishes to everybody, and we will see you soon.